Good day. Today we're going to be talking about the London session secret model. So here is a step-by-step approach. First, draw the high and the low of the Asian session opening range. You all recall the Asian session is from 20 to 00 a.m. UTC 5. That was the time for the Asian session. So draw out the high and the low of the opening Asian range. Locate a 4-hour key level above or below the opening range. Wait for one end of the range to be purged or swooped while testing a key level. Locate a 5-minute or 4-hour CROT as the key level is being tested. Wait for price to displace back into the Asian range. Look for a clear displacement indicating a return into the range after liquidity is taken. After displacement on the retracement, find your entry model on the 5 to 15 minute time frame. So here we are. Here's some illustration. And this whole gray shaded area is the Asian session. And it's usually 20, let me make this more thick, 20 to 00. That's the opening of the new day candle. And as you can see at this vertical line, I marked out the opening price. So this whole gray shaded area is the Asian session range. So wait for one end of the range to be taken out, like you can see here. This range, you can see there was inside bar candles, like you can see this whole candle was a large bulky candle, and you got your consolidation inside this range. So wait for one end of the range to be purged at a key time. So this purge should happen between 2 to 3 a.m. and the order flow should be as well, like in this case scenario, should be bearish. Remember, I actually taught you guys how to determine your order flow. Something like this. Rejecting highs, breaking lows, and also rejecting highs and breaking lows. So you get your range, trend, range, trend. So don't just pattern trade this model. So yeah, you got your Asian range. Let's just sell. Is the drawn liquidity lower for this bearish case scenario? Is the order flow bearish? Is the daily bias bearish? Those are some key factors you should actually align to this model. So don't just use it on its own. So wait for a purge between 2 to 3 a.m. tapping on your higher time frame key level. Then look for a clear indication. Like you can see here, after taking out the high, you saw a large displacement downward, showing price wants to go lower. Then a retracement into your lower time frame of the block or breaker block or your OTE region, because this is basically a retracement. If you take this from here, you got your OTE region. Okay, things actually retrace. Let me say something like this. That's your OTE region. So This might be your retracement into your OT region or your order block or whatever have you. And you can target your opposing draw on liquidity, or you can target your Asian session high and low or low as your draw on liquidity. Remember, I told you guys highs and low can be used as session highs and lows can be used as draw on liquidity. And for this case, you can target your Asian session high as your first draw on liquidity, then target the low. That's for bullish scenario, but for this bearish scenario, you can target your Asian session low as draw on liquidity. So here, moving on to this chart here on the bullish scenario, you got your range, then you got your opening price. What happens? Open low. Remember the open low concept. So opening price, buy below the opening price. So your turtle soup below the opening price of the Asian range, sweeping the Asian session low, tapping on your higher time frame key level. Then you got your large displacement higher, indicating price wants to actually go higher. So study this diagram carefully, and also this as well. Study it carefully and the step-by-step approach. So today's video is going to be on a trade recap and explaining the London session secret model as well. So let's get straight into the video. So here on Euro USD, we got our daily CRT here, daily CRT low and daily CRT high, which was basically our draw on liquidity. So I actually called this live. That was the 1.09500, and just few actually took advantage of this. So you can see this range low swept, close back into the range. The Friday continuation towards where our range high, then Monday expansion towards here, then the next candle we can anticipate this high to be taken out. So focusing on the Monday's candle, because that was where I actually took the trade. So let me just break down this whole price action right here first. Okay, here we are. So we swept this low, which was our candle range low, and we actually had an SMT here with GBP USD swept this low over here, but Euro USD did not actually take this low out. So we got a bullish SMT with GBP USD. Let me show you the SMT real quick. So you can see this low was actually swept by GBP USD, but Euro USD did not actually take this low. So we got an SMT. My trade wasn't actually below this low. I'm just trying to decipher this whole price action for you guys. So this is your SMT divergence with GBP USD. So we got a rejection block over here. We got a rejection block, and drawing this out in time, and we got a 4-hour range low, which was actually swept, tapping on the rejection block. Sorry about this. Okay, so range low swept. Let me just make this turtle soup. So going down to the 1 hour time frame, you can see this was actually our London session secret model in play, and this was the Asian session range. Then what actually happened, this was opening price. Yeah, you can see your time zone. This is the opening price. So the market actually dumped below the opening price, sweeping our Asian session low and tapping on our rejection block, then forming a 3 candle CROT pattern. You can see that long wick closing above, and you can see this wickless candle, also a strong draw on liquidity as well, and closing above this becomes your CRT high, CRT low swept into your rejection block, CRT high used as a key level to push price higher towards your Asian session high. And if you want to actually hold higher, you can actually hold higher to your previous Asian session high, which is this. And if you look to your left, what do you got there? You got your low resistance liquidity run. So the market actually expanding higher is more likely to happen because of this whole liquidity resting above these highs. So this was actually purged at a key time. Let's go to the lower time frame. Let me take this real back real quick. So this was purged at a key time. This was 2 a.m. This was 2 a.m. candle, and this was the 3 a.m. / 3:30. So sorry, let me take this off. So this was purged at a key time, and remember I told you the purge should happen between 2 a.m. to 3 a.m. So this was swept 3:30 a.m. tapping on the rejection block. Remember, your higher time frame rejection block is your lower time frame order block. As you can see here, this is actually a lower time frame order block. So you got your turtle soup tapping on your Asian session low. Sweeping your Asian session low, tapping on the key level. Where is our opening price? This was our opening price here. You can see the time zone. So yeah, this is our opening price. Turtle soup below the opening price. Buy low, open high, low, close. Remember the principle. So buying low, then you remember your sequence, your order block, OT, and kiss of death and all of that. So here you got a retracement firstly into this order block over here. I used these 2 candles together as my order block. So you got a retracement on the first tap of this here. That's your first buying opportunity, and you got your breaker block retracement over here. That's your second buying opportunity. Then before price expanded higher to first the Asian session high, then second the previous Asian session high. So you can see how I am actually putting everything together. So my trade was actually the next day, which was Monday. So here, playing this out, we got a range here. Sorry, let me take this back a bit. So we got a range first, then a trend, then we go back into a ranging profile, range generation of interest. So what follows a consolidation, expansion, consolidation. That was the sequence. So where is our key level? This was outlined as my key level on my Telegram group here for my students. This was the key level for this trade. And I didn't actually pattern trade my CRT choosing what. Let me say, okay, I'll be waiting. I actually got that comment on my Twitter page saying why I didn't actually wait for this low to be swept and why did I just enter. The person was actually saying why didn't I wait for this low to be swept before looking for longs. And I actually replied key level and time. So here we dug into our key level with this candle here. Then going lower to our 1 hour time frame, we swept our, let me put this aside, but note this is our key level for this trade. We swept our Asian session range, which is actually this Asian session low, and we're below the opening price. That's the opening price here. And this was swept around 3 a.m. Remember I told you guys the pause will happen between 2 to 3 a.m. When we get to the next chapter, which is time at level 4, I will emphasize on mini time-based model. This is just the tip of the iceberg, for real. So this was swept during a key time and sweeping our Asian session low, tapping on our key level, and on the lower time frame you can see we actually formed an order block during a key time. Remember I told you guys about high probability order blocks. Sweeps liquidity, forms around the key level, and formed at a key time. So this order block was formed at a key time here, and you got your retracement into the order block here. Remember the sequence, don't sleep on it. So we got a second retracement, and you can see how price respected this order block neatly. Tapping on it once, use the second candle to expand. So expansion, clearing out our Asian session high, and this was our previous day high, which would be your first target. Then you got your kiss of death, turtle soup, before going higher and higher. So this whole move downwards was price actually returning to the discount region here below the 0.5 level, returning to the discount region and rebalancing this imbalance here. So let me say you actually missed this soup here, buying below this low. You got another case of that total soup here for your second buying opportunity. And this total soup as well happened during a key time. We haven't gotten to key times in the time session, so when we get there, you will know what I mean. So expanding higher, sweeping this, that's your first target. Remember your final target here, your daily candle range high. So going to the higher time frame, let's see what actually happens next. We go into a little bit of consolidation, then remember I actually told you guys, when bullish, wait for a pop below an old low. So you can see the same London session secret model. So this was used as a key level for price. So don't pattern trade CRT. Let me say you will be waiting for this CRT low to be swept. No. Here, this was used as a drawn liquidity. As a key level to push price higher. So you got your key level to the left. This key level is actually similar to this key level. So here is actually a little source. I wasn't planning on releasing this out yet, but let me just say this. So let me say you got your range, then you got your dump below the old low and your manipulation and your expansion higher towards your draw. That's your draw on liquidity. Price breaks through this. Let me say there was a little structure here, breaking through the draw on liquidity. When price retraces back, this draw on liquidity can be used as a key level to actually push price higher. As you can see here on this chart here. So let me take this out. So this was the drawn liquidity for this trade. Taken out, used as key level. Drawn liquidity for this trade. Taken out, coming back. This was used as a key level. This was a deep retracement and consolidation because this was actually tapped on during the Asian session range. So we just ranged at the key level before a key time, then expansion occurred. So we got our 4-hour candle range here. This was the single candle range here. And the London session secret model. So here, total soup. And this was pushed around 2:15. So remember the key time I actually outlined to you guys. The push will happen between 2 to 3 a.m. So this was swept between 2 a.m. If you look to your left, what do you got there? You got your low resistance liquidity run here. So you can target this for your first target, or you can hold to your final target. And you can see how price expanded explosively towards your daily range high. So my trade I took the trade from this low here, below this low, and I kept my stop somewhere here. This was my invalidation. I don't want to actually disclose why I actually kept the stop here, but that will actually be taught about on level 4, where you got your turtle soup, stop loss, and time base soup and all that. So I held this trade towards this whole move, and I closed out here 5109,500. Yeah, somewhere here. And it was actually a nice trade, and it was beautiful. So I just actually reviewed just a little bit of how the market makers actually push price during the London session. So it's left for you to actually sharpen your edge and take use of this knowledge, and don't let it go to waste. Because I'm not actually using a PowerPoint or something. I'm literally decoding the algorithm right in front of you. So I'm not using some edited charts or some drawings, none of that. So let me show you guys something. So you got your small candle, large candle, small candle, large candle, small candles, and large candles. Consolidation followed by expansion, followed by consolidation. So small candles are actually followed by large candles. Remember your range dynamics, the range, trend, range, and trend. That's how the market makers keeps price going, not in a straight line. So know your draw on liquidity, know your daily bias, know your order flow. Like you can see here on this trade, the order flow was literally bullish, rejecting lows, breaking highs, rejecting lows, breaking highs, rejecting lows, breaking highs, rejecting lows, breaking highs, till your final draw on liquidity was met. So your entry and your exit should be important. So if I didn't actually hesitate here, I would have lost this whole trade. I would have been stopped out. Look here. We got a sharp dump, and another dump coming up here. So you can see why your entry and your exit are very important, and you should actually note them down. So every exit is an entry. I exited here. This was 5 here, somewhere here. Sorry. somewhere here. That's, yeah. And you can see after I took off, the market reversed. It's not magic, it's logic. So note all in practice, all you're being taught. So let me highlight something real quick for you guys. This high was actually what? This was previous week high. And here, let me go to the weekly time frame to mark that out. This was previous week high. So the market expanded towards previous week high and displaced to your previous week low and your fair value gap or liquidity void, what have you. So here, the market moved from bullish order flow to bearish order flow after completing its drawn liquidity. After this high was taken out, the market reversed. So nothing the market actually does is random. Take note of everything you see in the market. So let me actually outline something real quick. The keys of death turtle soup with their London session circuit model. So remember, I actually told you guys draw on liquidities for previous trades can be used as key level. That's something no one has actually talked about or mentioned before. So you can see this high was run through, and maybe this was Thursday's price action. Yeah, Thursday's price action, and this was Wednesday. That's previous day's low. So those who actually shorted above this high, they have to target this low because this is actually the nearest target. So this actually can be used as our key level for price action. And luckily, this is also our CRT high swept going down to our CRT low. And of course, this is our high probability order block here, this candle, which is your change in state of delivery from a bullish delivery of price action to a bearish delivery of price action. So this was our intended draw on liquidity, our previous week low. So CRT high swept CRT low. So don't pattern trade CRT. I keep saying this. Some people will be like, oh, let me take this and wait for this to be taken out. And remember this, look what actually happens. Boom, here. You got a little dump, then you got a retracement into this level, then dumping lower towards the previous week low. So don't actually pattern trade CRT. Like at this point here, this key level was actually tapped on by this candle here, and I didn't actually wait for this candle range to be taken out before looking for buys. So if you trade CRT in Turtle Soup with the right logic, you will, let me just say, the sky is your limit. Then if you pattern trade CRT and Turtle Soup, you're basically just gonna lose all your money, for real. So here, CRT low or drawn liquidity, previous drawn liquidity for the previous day, used as key level to push price lower towards this point here. So let me show you something real quick on the lower time frame. So you can see your London session secret model. When I mean on pattern trade, let me say, okay, Chris actually told us to wait for the Asian range to be swept, either the high or low, which one was swept first, then enter longs on the opposite side. Here you can see the the order flow is clearly bearish from your 4-hour change of state of delivery, which is actually this order block here, which actually swept liquidity from this order block here, retracing into this order block, dump, retracing before dumping. So the order flow shifted from bullish to bearish. So you actually planning to buy here, it's actually stupid, for real. Let me say you mark this out, Asian session low, or let me just use this Asian session low, swept and rejection block. This rejection block, right? Yeah. Oh yeah, it has long wick. This is the 50%. Then let me use this CRT high, then CRT. Let me use this candle range. Yeah, this is the biggest bulky candle. We got our inside bar and rejection block, retracement 50%. Then target is, don't do that. What's the order flow? What's the daily bias? Let's go to the daily time frame. Let me show you the daily bias. So here, daily bias, wick above the candle range high, close back into the range, close back into the range, closing below lows, closing below lows. So it's obviously bearish. So you actually buying here, it's stupid, for real. And don't actually pattern trade this stuff, because you're basically going to enjoy yourself and you're going to lose all your money and go broke. So here you got your delayed protection here, range, then manipulation, tapping on the key level. You can see how price tapped on it neatly, sweeping where our Asian session high, then having a sharp displacement. Let me make this dashed. Okay, having a sharp displacement indicating lower prices. So when bearish, don't enter at once. Don't mark any random high or low to say like, okay, let me just turtle soup this out here. This is just a, let me just enter up here. Let me sell here and keep my stop above the Asian session high, or let me put it above here, and boom, you got wrecked. So okay, let me enter here. This is a bearish fair value gap. I want to actually just note some common errors some actually do. all those ICT pattern traders. Here, Total Soup, okay, Fair Valley Gap, or yeah, other block. Sell from here, and target where previous day low here, and you lose all your money, you go broke. So don't do that, please. When bearish, wait for a pop above an old low, old high when bearish. Then when bullish, wait for a dump below an old low. So here, this is your opening price. That's your true open. I actually posted something like that. That was this Saturday. So let me turn on the true open on this indicator. Okay, here we are. Okay. So this is your true day open. Total Soup above your true day open, tapping on the key level is a high probability Total Soup. So you got your open, high, then you got your low, then you got maybe this your opening price, open, high, then low, then your close will be something like this. Your close here of the daily candle. So everything actually resides on the open, high, low, close. So hope I'm making my point clear. So we got a dump below this old low, which was our weekly low. That's your previous week low as your draw on liquidity. If you go to the lower time frame, you will actually find another entry opportunity. Range, pop above this range, using your true day open as a key level. True day opens can also be used as key level. That's your source number 2 or number 3, because I've literally given a lot of source in this video. And this was tapped on a key time. I'm not going to be talking about time for now, but during the next chapter, which is level 4, your lives are literally going to change for the good, for the better. So hang on tight. So if you want to actually copy my settings for this indicator, you can as well screenshot this as well, and you can turn on whatever you want to turn on. So I'll basically be talking for like 40 minutes now. So please, I would love to actually see you guys in level 4. You have actually all came this far, and it's best you actually finished this program. Finish up. You don't start something and don't finish it. Finish up. So registration for level 4 is officially open and has started. Message me on Telegram and After all the procedures, you will be added to the level 4 group, where we're going to be focusing on the time axis here. We're done with the price, so we're going to be focusing mainly on the time axis, and it's going to be the last episode and the last chapter and your turning points in life. So we're done with this, so we're going to be focusing on this for level 4. So I wish you all good luck and good trading. See you guys in level 4.